When thinking of big banking institutions, we think of them taking care of their clients and customers, conducting business ethically, and following all their own regulations and procedures. But over history, it has shown us that not everyone follows their own rules. And if they make a huge profit for themselves, regardless of the law, then they will. In today's video, we will be taking a look at the dangerous game of money laundering and the banking institutions onboarding criminals as clients. Before diving into today's video, be sure to subscribe so you don't miss out on any future videos. Oh, and don't forget to leave us a comment with any suggested topics you would like us to cover in the future. So, on to today's video. What is money laundering? Money laundering is the process of concealing the origin of money obtained from illicit activities, such as drug trafficking, corruption, embezzlement, or gambling, by converting it into a legitimate source. It is a crime in many jurisdictions with varying definitions, and is usually a key operation of organised crime. Criminals follow the money laundering cycle to clean their dirty money. The money laundering cycle consists of placing the dirty money into a legitimate financial system. Layering it conceals the source through a series of transactions and bookkeeping tricks. And lastly, integrating the now clean money back into the financial system through a series of purchases, like buying real estate or purchasing luxury items like jewellery or cars. The dangers of money laundering. Money laundering as a whole is a dangerous act that can have a devastating effect on not only the wider society and economy, but also for families and loved ones of the people involved. Every day they are walking a tightrope on whether they are caught or not, or whether they will meet an untimely end. Imprisonment is likely if you are caught by the authorities. However, if the launderers fall out of favour with the organised crime group they are working for, then the loss of life is more probable. 4 facts of the impact of money laundering. Imprisonment. If a banking institution is caught doing dodgy dealings, more often than not, they will be fined and be ordered to tighten their policies and procedures, and will be monitored for a period of time. However, there have been cases of individuals who have been imprisoned for their actions. Take, for example, Bernie Madoff. Bernie Madoff was an American financier who was found guilty of creating the biggest Ponzi scheme in history. The scheme was worth around $64 billion, with thousands of investors investing their life savings into his scheme. Many of the investors lost everything, including their life savings as well as their homes. In 2009, Bernie Madoff was sentenced to 150 years in prison, and there he remained until his death in 2021. Violence. As previously mentioned, dealing with any kind of organised criminal can be very dangerous. More often than not, criminal activity and violence go hand in hand. Take, for example, drug trafficking. Sourcing the products and then transporting it is very precarious and very valuable to the trafficker. Creating a sense of fear keeps workers in line, and with the threat of being hurt or their families coming to harm, they wouldn't dare contact the authorities. Disruption to society and economy. Criminal activity has a huge impact on our society and economy. The most common estimate for the amount of money laundered globally in 1 year is 2 to 5% of global GDP, or 800 billion to 2 trillion US dollars. Now let's take a second and think about what that amount of money could go towards, if it was put back into society. Regeneration of schools, hospitals, outreach services would be better funded for people who need them. homes could be redeveloped, and taxes wouldn't need to rise. All criminal activity which defrauds the government out of money falls on us to pick up the tab and fill in the gap. Reputational damage for any person or company involved. Any business, whether big or small, strives to have a good reputation. Having a good reputation generates business and gives customers and clients the confidence to do business with you. If a sector has been found out to have been onboarding clients with shady dealings, or who wouldn't have followed their own policies and procedures, this will have a big impact on their business, and rightly so. Let's take a look at a few banking institutions who were found out to be doing business with criminals. There have been countless examples of cartels working with big banking institutions to launder their profits under the supposed unsuspecting noses of institutional authorities, and even more scarily, committing acts of murder on launderers and traffickers to get them out the way. For example, HSBC. In 2012, it came to light that HSBC were being sued by 4 American families who claimed they had family members gunned down by Mexican cartels due to the fact HSBC had facilitated the gangs in laundering their money through the banking system. Internal and external procedures were ignored, and Mexico's risk rating was lowered so that the funds could pass through the bank unquestioned. Chris Blackhurst, a very well-known author who wrote the book Too Big to Jail, detailed all about the corrupt dealings of HSBC and the Mexican cartels, highlighting that HSBC were a banking operation that was not being properly policed. As a result, the Mexican Sinaloa drug cartel became an enthusiastic HSBC customer, depositing vast sums in tainted used notes and using the bank to move funds across borders. HSBC has always promoted itself as an ethical bank, when in actuality, it was far from it. After an investigation, HSBC received a fine of $1.9 billion and a 5-year remedial program. Hardly a fine when the bank makes that in a few weeks as profit. Credit Suisse. After a huge data leak from a whistleblower in February 2022, it showed that the bank had some very unsavoury characters as customers. People traffickers, drug traffickers, and individuals involved in torture were on the list, with the bank cleaning their money without a batter of an eyelid. The bank then became the first in history to undergo a criminal trial in Switzerland. Authorities charged the bank with direct involvement in a Bulgarian cocaine smuggling ring, with millions of euros laundered directly through the bank. Since 2020, Credit Suisse has faced $4 billion in litigation costs and suffered losses of $4 billion. In October 2022, the bank reached a $495 million settlement with United States regulators over its role in the 2008 to 2009 financial crisis. This fine follows a 2017 penalty just over $5 billion for its role in the subprime mortgage crisis. And lastly, we have JP Morgan. JP Morgan, the largest bank based in the United States, moved money for people and companies tied to massive looting of public funds in Malaysia, Venezuela, and Ukraine. A global leak of documents known as the FinCEN files reveals. Internal compliance officers identified $514 billion in JP Morgan transactions as possible money laundering or other criminal activity between 1999 and 2017. JP Morgan also moved more than $1 billion for the fugitive financier behind Malaysia's 1MDB scandal and more than $2 million for a young energy mogul's company that had been accused of cheating Venezuela's government and helping cause electrical blackouts that crippled large parts of the country. When questioned about the scandal, JP Morgan said they were legally prohibited in discussing clients and transactions, and that they were taking more a leadership role in pursuing proactive intelligence-led investigations and developing innovative techniques to help combat financial crime. Whatever way you look at it, it seems that time and time again, the financial sector seems to get away with being able to commit a crime under their own law, policies and procedures, and escape with a fine that they can easily pay and carry on conducting business. Well, there you have it. The dangerous game of money laundering and the banking institutions onboarding criminals as clients. Please let us know in the comments section if you think the financial sector can do more to tackle money laundering. We have now launched our very own courses for you to take a more in-depth look at a variety of subjects, such as Introduction to AML, Beneficial Ownership, and Customer Risk Rating, for example. So make sure you visit our website for further details and let us help you connect the dots in KYC. Thank you for watching the video, and if you made it this far, don't forget to like and subscribe to watch more amazing videos.